Hey everyone, welcome back to Corporate Decoder. Today, Humacyte Inc. just filed a notice of delisting, and I am seeing one big concern that matters. Quick note, this is not financial advice, just my take on public filings for educational purposes. Humacyte received a warning from Nasdaq because their stock price has been too low, and they have a limited time to fix it. This filing is an 8K report, which companies use to announce major events that shareholders should know about right away. Think of it as a really important public announcement. The big news here comes from the 31st of July, 2026. Humacyte Incorporated got a letter from Nasdaq, the stock exchange where their shares are traded. Nasdaq told them that their common stock, the basic kind of stock most people own, has been trading below $1 per share for a while. Specifically for 30 business days in a row, ending on the 30th of July, 2026. Nasdaq has rules that companies have to follow to stay listed on their exchange, and one of those rules is that the stock price needs to stay above a certain level, in this case, $1. Now, Nasdaq is giving Humacyte a chance to fix this. They have 180 days, which is about 6 months, until the 27th of January 2027. During this time, they need to get their stock price back up and keep it at $1 or more for at least 10 consecutive business days. This is a serious warning. If a company's stock price consistently stays too low, it can eventually be delisted, meaning it is no longer traded on a major exchange. Like Nasdaq, this makes it much harder for investors to buy and sell the stock. The company itself acknowledges this. They are saying they will watch their stock price and think about what they can do to meet Nasdaq's requirements. But they also want everyone to know that there is no guarantee they will be able to get their stock price back up. This is a really important statement because it signals uncertainty about the company's future on the stock market. This situation is not unique. We've seen other companies face similar challenges, for instance, when Kodak tried to restructure with a reverse stock split in 2021. It was an attempt to boost their share price, but ultimately it did not prevent their delisting. Historically, about half of companies that undergo reverse stock splits, which is often a tactic to address low share prices, end up delisted anyway. For Humacyte, if their stock price were to stay below $1 and they were delisted, a hypothetical $1,000 investment could see its liquidity drastically reduced, making it very difficult to sell or buy shares. The report also includes a section called Forward-Looking Statements. This is basically a legal disclaimer where the company talks about what they expect to happen in the future. They use words like may, will, and expect to describe possibilities. They are saying that these future predictions are based on what they know now and their best guesses about the future. However, they also warn that actual results could be very different due to many risks and uncertainties. Among the risks they mention are their ability to keep their stock listed on Nasdaq and the future trading of their shares. This directly relates to the delisting notice we just discussed. They are telling investors not to rely too heavily on these future predictions because things can change unexpectedly. They also point to their risk factors section in other filings like their annual report. This is where they detail all the things that could go wrong and negatively impact the company. It is always a good idea to read those sections to get a full picture of the company's challenges. Crucially, they state that they do not plan to update these forward-looking statements unless the law requires it. This means that the information in this report reflects their views at the time of filing and they are not promising to keep it current. Finally, the report is signed by Dale A. Sander, who holds multiple important roles at Humacyte, including Chief Financial Officer, Chief Corporate Development Officer, and Treasurer. This signature means that a high-ranking official at the company has reviewed and approved the information in this filing. Now, looking at this filing, the main story is clear. Humacyte is in danger of being delisted from Nasdaq due to its low stock price. They have a deadline to fix it, but they themselves admit there is no guarantee of success. This puts a lot of pressure on the company to somehow boost its stock value significantly in the coming months. The risk of delisting means potential investors will be very cautious. And existing shareholders might be looking for any sign of improvement or considering selling their shares before it is too late. This isn't just a minor hiccup, it is a significant challenge to the company's public trading status. The core issue here is that the market is not valuing Humacyte's stock above $1. This could be due to a number of factors, including doubts about the company's future growth, its financial health, or perhaps broader market conditions affecting biotechnology stocks. While they are working on potential solutions, the uncertainty they themselves highlight is the biggest red flag. Investors will be watching very closely to see if Humacyte can turn things around before their deadline. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. You can also join our Discord. It is linked in the description.